What's good, everybody? I hope y'all are doing well today. I'm going to be talking about my investment strategy. I'm going to give y'all the whole breakdown. It's not that complicated. It's not hard to understand. So, it should be a quick video. I like to talk though. So if it going a little long, I apologize, but I'm going to try to make it quick. All right, first, I call this strategy the Mayweather method. Now, why do I call it that? Because if you know who Floyd Mayweather is, he's a boxer. He has a very defensive style of boxing. A lot of people say he has the best defense in the history of boxing. So I named my strategy after Floyd Mayweather because what he does in the ring, I basically try to recreate in the stock market. I didn't think about it before I did it, but afterwards I'm like, this kind of reminded me of Floyd Mayweather, so then I started calling it the Mayweather method. Now, the reason Floyd Mayweather is so good is because he understands the name of the game. And it's the same in boxing as it is in the stock market. Hit and don't get hit. How's that translate? Easy. You want to make profits. You don't want to take losses, right? But if you know anything about if you've been investing for any amount of time, you understand it's simple, but it's not easy. That's a simple concept to understand. Of course, I want to make money. I don't want to lose money, but it's really not that easy. It's not that easy. Now, Floyd has a strategy. He has a game plan. If for whatever reason, and let's just talk about what his game plan is. He doesn't go into it thinking about, oh, I'm trying to get a knockout in the second round, right? He's going in it thinking, I'm going to win every round. I'm going to land more hits than my opponent, and I'm going to get hit less than my opponent. He won't be able to touch me. I'm going to hit with precision. He won't be able to stop me. He won't be able to touch me. It's a simple game plan. Now, for whatever reason, if an opponent is doing something that he didn't prepare for and he has to make an adjustment in the middle of the fight, he'll do it. And maybe he might have lost a round or two or maybe three. But at the end of the day, he's going to win more rounds. And that's what I try to do with this strategy in the stock market. If for whatever reason the market changes, conditions change, maybe Trump gonna come out and say, you know what, tariffs are back on, and everybody is gonna say, oh no, and then it's gonna be April 9th again, and the market is gonna crash. Maybe I might have to adjust my strategy just a bit, but that's not a problem because that's just life. Things have to be adjusted sometimes. Nothing is gonna be 100% of the time. It's just not how it works. But that is the mindset behind the strategy itself. Building steady profits, not those Mike Tyson type return. It's not trying to get 50, 60, 75% returns. It's not that. It's getting consistent gains over a long period of time. Now, let's just get straight into what the strategy is because I don't want to waste y'all time. The first part of it is when to buy. I buy not when the stock is going up. I buy when the stock is going down. I buy into the weakness. If a stock goes down 0 to 2%, I do nothing. It's not enough. I don't buy if it's not down more than 2%. Now, if it's down anywhere from 2 to 5%, I'll buy $5. If it's down 5 to 8%, I'll buy $10. If it's down 8 to 11%, I'll buy $15. And if it's down more than 11%, I'll buy $20. Now, you'll say, okay, I get what you're saying, but just help me just a little bit more. Okay, let's say this, what if it opens at, the market opens is down 1%? Then what? Well, I'm gonna wait until it's go down 2%, and then I'll buy. It's simple. Okay, what if it's down 2%, you buy at 2, and then it goes down to 5? then I'll buy 5 more. It's not complicated. It's easy to understand. It's simple. Let's see. The sell part of it. I sell when I make $15 in profit on a stock. When I have $15 in profit, I will sell my stock. Now, you don't have to choose 15. I'm not saying even to use my method, but I'm just explaining it. I chose 15 because I felt like it was a reasonable number. But considering how much time it takes to build up a position in the stock, I don't want to be selling out for $5. I need a little bit more than that. So I settled on 15 for me because I felt like it's fair. It's very doable. Why does this strategy work? And in the next video, I'm gonna, I'm gonna show what the strategy is doing, how it's doing, and stuff like that. But I'm not gonna talk about that in this video. I'm gonna talk about it in the next video. But why does the strategy work? Well, it's simple. It works because, number one, it takes the emotion out of the investor. A lot of people's enemy is their emotions. Fear, anger, greed, all this stuff. If you've done any research into investing, you're going to hear these things. And I know firsthand. I used to think when they said, okay, let me just tell you. They said 90% of traders lose money. They kind of tell you that to discourage you because it's real. It's a fact. But I'm like, why I can't be the 10%? Why do I have to assume I'm being the 90? And that's the mindset I had when I first started. If you watched my first video, when I made $1,700 in 6 months. Now the problem was, after about the 6 month mark, I did not have emotional discipline at all. The plans, the strategy was changing based on what I was feeling. Like, or even you would be up on a stock and you like every second, like, oh, should I sell now? Should I sell now? Or what if I lose my profits? Or if the stock is down, is it gonna go down more? Should I give it more time? Should I wait? Or I'm gonna keep holding? If you don't have emotional discipline, you're gonna struggle. And this strategy requires no emotional discipline for me, besides just following the rules, which is easy to do. But that just leads me into the second reason why this strategy works. Is the strategy is designed to work well in a bear market or a bull market. How is that? If you listen to any long-term investors, people who invest for they buy stocks to hold for years, you know what they'll tell you? I love a bear market. I love a market crash. Why? Why would you like a market crash? Because you are never gonna get stocks more cheap than after a market crash. Everything is just, it's like all the best foods is just right in front of you. You just get to pick and you can just have it all because nothing is expensive. The steak that normally costs $100 costs $18. The caviar costs $25. Everything is just a deal. So in a bear market, my strategy is designed to, as the market goes down, I buy more at better prices. So I'm not afraid of a bear market. In a bull market, stocks are going up. I'm making money. Everybody's making money. So that's wonderful. I love I love a bull market. So whether things are going quote unquote good or whether things are going quote unquote bad, if you listen to certain people talk on TV, I'm really not worried about it. If my stocks go down, I'm really not phased because I'm like, okay, I guess I'm just buying more. I guess I'm just getting better prices. That's kind of how I think about it. When my stocks are going up, that's good. I'm making money. It takes the emotion out of it. It takes the stress out of it. And it just gives you a certain peace. And if you can have a strategy that works for you, is consistent, then you won't have anything to worry about. Whether it's when I wish that I started it back in April when the market crashed. I honestly do, because stocks would have been lower. I would have been buying at cheaper prices, and my stocks would be even. I mean, I would have more money than I have right now as far as like my gain, even though I haven't locked it in yet. But if you look at my account, it would be higher. So I wish I would have started in April, not in May, when everything was kind of starting to rebound. Not quite, but kind of. Now, I do have about 35 stocks. I'll say right now I'm in 35 stocks. I counted it just for this video because I was like, I want to know. And I have a complete list of 38, but I haven't, like the other three haven't went down 2% in a day, unfortunately. And if that wasn't clear, let me mention that. When I say down 2%, 5%, 8%, I mean in one day. I'm not talking about yesterday it was at, this price. Now, 2 days later, it's down 2%. No. I'm talking about one day down 2%, 5%, 8%, 11%. Okay. How you might be thinking, how do you track 35 stocks? I mean, you cannot possibly watch it all day long. And you're absolutely right. I cannot watch it all day long. But what I can do is check it periodically. And how I do it is, and because I have Cash App, not to say this is exclusive to Cash App, but I put in a custom order where I calculate how much what would the price be if the stock was down 2%. Now, it's not hard to calculate. It takes literally 15 seconds, if that. It's very fast. All you have to do is look at the previous close price, multiply it times 0.02, and then subtract it by the previous close price, and that'll give you the number of what the stock would be at in order to be down 2%. So once I get that number, I put in a custom order. I'll say, if this stock hits this number, buy 5. And that's it. I mean, I have to check it, obviously, periodically. I have to do it for multiple stocks if they're close. I don't do it for every stock. Like, I do it if a stock is down 1.2%, I'm like, okay, maybe it might go down to 2. I don't know. So then I'll put in a custom order. Sometimes, a lot of times it don't get filled. Sometimes it went down to 1.2, then by the end of the day, it's up 1%. So it doesn't always fill, but it's better. I feel a lot better knowing that I put in an order and it didn't fill than if I check it later and then I realize I missed my buying point. And then now I just be mad. I'll be like, man, it's already taking long enough just to, but right. So that is my strategy. I created this strategy because I wanted to be something that anybody can do, right? I want it to be little effort, not no effort, but I want it to be little effort. I want it to be very effective, and I want it to be simple to understand. Now, you don't have to understand income statements and balance sheets and cash flow. You don't have to understand none of that in order to use this strategy. All you have to, I will say one final thing, a reason why this strategy works, and I forgot to mention it. And it relates to what I was just saying about just needing to understand basic things in order to do this. Volatility is very important. The stocks that are doing the best for me right now are the ones that have the most volatility. Why is that? Well, more volatility means basically it goes up and down more. More people are trading it, more people are buying and selling it, so it fluctuates more. And works perfect for me because when it goes down, I get to build my position. When it goes up, I make more profit. So all my best stocks are the ones with the most volatility right now. Some of them, and with that, there comes a risk, right? So one of my best stocks could be AMD, right? AMD could be up 11% today. And next week, it could be down to one of my worst stocks. It could be only up 2 or 3%. But the point is having such a diverse selection. I have about 35 right now. It covers so many industries, so many sectors. And you'll hear people talk about diversification. There's always going to be stocks that's doing well and that's going up. So the top stocks for me are never the same. They might be the same for like a few days, a week, maybe a week and a half, but eventually they just fluctuate. But somehow, some way, the gain on my account just keep increasing. So the strategy is working for me. Yeah, I don't really think I have anything else. I don't want to run on too long. But I was just saying about volatility. Yeah, I was talking about volatility. I would stay away from stocks that don't have, I typically like to stay in the range of companies that have like 20, around 20 million or more, shares being traded daily. Because it just, sometimes it's a little bit less. Some of my stocks are a little bit less, but that's far and few between. Most of them are, I would stay away from small cap stocks for this strategy because the volatility is just not there. And the volatility is very important for this strategy. Next video, I'm going to be showing how it's doing. I'm going to be showing which stocks are doing well, which stocks are not doing well right now. I'm gonna be showing my gain. I'm gonna be showing how much I have invested. I'm gonna be showing all of that. I'm gonna be breaking that down. Maybe giving some news about maybe why some stocks are doing well, why some stocks are not doing well, what stocks that I like, what stocks I don't like. And yeah, I appreciate y'all watching this video. If you like this video, if you like the strategy, if you got something out of it, hit the subscribe button, hit the like button, comment, whatever you want to comment. And yeah, I'll see y'all in the next one.